Hello students, in today's lecture I will discuss with you CA Inter Corporate and Other Laws September 24 attempt question paper. At the end of this lecture I will share my opinion on this question paper, whether it is easy or moderate or difficult. So let's begin our discussion with question number 1, which is a compulsory question. SAB Health Products Limited issued equity shares worth rupees 5 crores, 5 lakh equity shares of rupees 100 each, and it was fully subscribed and partly paid at rupees 50 each. So face value 100 rupees, paid up value 50 rupees. The company made a call to all its subscribers to pay a sum of rupees 30 for each share held by them. So how much is the call amount? How much is the call amount? 30 rupees. Mr. GH, a subscriber to the shares of a company holding 10,000 shares, paid all the money due on the shares held by him in advance. So how much amount he paid? 50 rupees per share he paid. How much is the call amount? 30 rupees per share. That means he paid extra 20 rupees, which is calls in advance. As you all know, calls in advance is a liability to the company. It will not form part of paid up share capital. Later, Mr. GH claimed interest on the money advanced by him and also dividend in respect of advance money paid. Is his claim justified? So here the answer to this question, it is company's articles of association. If company's AOA permits company to pay interest on calls in advance, then the claim of Mr. GH is justified with respect to interest on calls in advance. Now coming to the dividends, with respect to calls in advance, generally no extra voting rights, no extra dividends. And let me show you one more provision. Section 51 of Companies Act 2013. It is saying, payment of dividend in proportion to the amount paid up. A company may, if so authorized by its articles, pay dividend in proportion to the amount paid up on each share. So generally, whenever company declares a dividend, say for suppose 20% or 30%, in the absence of this point in the articles of association, companies will pay dividends on its face value, on company's share face value. If this point is mentioned in articles of association, then company will pay dividend on paid up value. Understood? And you all know paid up value excludes calls in advance. So finally, the answer is, if AOA authorizes company to pay interest on calls in advance, then the claim of Mr. GH is justified. And with respect to calls in advance, no extra voting rights, no dividends. Another shareholder, Mr. LK, holding 15,000 shares, did not pay the first call. So the directors called upon him to pay the entire amount due. Entire amount due, how much? 50 rupees in respect of the shares held by him. Referring to the provisions of Companies Act 2013 and rules made thereunder, examine whether the directors of SAB Health Products Limited permitted to do so. The answer is no, not permitted. Why? Calls on shares must be on uniform basis. If you fix call amount as 30 rupees per share, then you can collect only 30 rupees per share from all members. You can't collect higher amounts, you can't collect lower amounts. Understood? So accordingly, the action of directors of SAB Health Products Limited is not permissible. Next question. See, this question was asked for 5 marks. So 5 marks on calls on shares as well as calls in advance. Next question. Right Trading Limited is a company engaged in trading of automobile spare parts during the current financial year 2024-25. Mr. J, the CFO, existing CFO, retired due to bad health. The company appointed Mr. C as a new CFO. On verification of financial statements and statutory returns of the company, Mr. C advised the board of Messrs. Right Trading Limited to revise the financial statements for the years 2021-22. He examined with reference to the applicable provisions of Companies Act 2013 whether Right Trading Limited can do so. So this question is related to voluntary revision of financial statements and board report. Yes, company may revise its financial statements and board report for the period not exceeding 3 preceding financial years. So we are in the financial year 2024-25. 3 preceding financial years means 2023-24, 2022-23, 2021-22. And in the question, they want to revise financial statements for the years 21-22. Yes, it is possible. As it is within the range of 3 preceding financial years, yes, company may revise its financial statements voluntarily. Understood. So this question was asked for 3 marks. Next one. DEF is conducting the audit of Right Trading Limited for the past 9 years. Now, due to requirement of rotation of auditors, DEF is going to retire at the upcoming AGM, and in its place, XYZ will be appointed as a auditor of Right Trading Limited. One of the partner, Mr. F, who was in charge of certification of financial statements of the company, retired from the firm DEF and joined the firm XYZ. Examine considering the provisions of Companies Act 2013 about the validity of appointment of XYZ. So the answer is appointment is invalid. Why? Why? See, there should be no connection between incoming auditor and outgoing auditor. Like both firms having common partner, both firms operating under common network, or both firms had a common owner. In that case, not only outgoing auditor, incoming auditor is also said to be disqualified. Understood. So here company cannot appoint XYZ audit firm. The reason is Mr. F is a partner in DEF. Of course, he retired. I agree with you. He retired and he joined the firm XYZ. The moment he joins XYZ, XYZ also gets disqualification. XYZ can't be appointed for the next 5 years. During the cooling period of 5 years, XYZ is disqualified. Next question. Rose was an Indian citizen who got a job in software company in the USA. She went to USA and stayed there for 12 years. During her stay, she purchased a house in USA for her residence. Then due to some personal issues, she moved back to India and joined a software company in India. As she had moved back to India, she let out her house in USA and deposited the rent in her account in USA. So she is earning rental incomes. This rent income she is getting outside India, from outside India. Out of that amount, she purchased another house in USA. Based on the above facts, answer the following referring to the provisions of Foreign Exchange Management Act 1999. Whether Ms. Rose can purchase house in USA and continue to retain it even after returning to India. The answer is yes. Refer to section 6 of Foreign Exchange Management Act 1999. A person when he was non-resident, during the status of non-resident, if he acquires any immovable property, if he acquires any financial security, if he earn any foreign currency, he or she can continue to hold such properties even after returning to India. There is no restriction on such holdings. Understood. Whether Miss Rose can purchase another house in USA after returning to India? Just look at the facts of the case, ma. She is purchasing new house property from the funds she earned, from the amount she earned from, rental income of the existing house property. So for purchasing new house property, she need money, and all that money is already in USA bank account. And how she earned that money? She earned that money out of renting of existing immovable property which was located outside India. Are you getting my point, students? So any amount earned outside India, yes, definitely they can deal with that foreign currency without any restrictions. So in this case, RBI permission, central government permission is not at all required. So no restrictions. Are you getting my point, students? So here also the answer is yes. And this question was asked for 4 marks. Next one. So with this first question completed, ma. Second question. Stuti Ceramic Private Limited manufactures crockery items which are predominantly used only by the domestic household customers. Now the company wants to expand its area of operation to manufacture all types of crockery items and cutlery for the use of big hotels. For this expansion plan, the company needs funds of around 500 lakhs. The company does not want to convert itself from private to public company since promoters do not want to dilute their stake. Otherwise, the public company have the option to raise the funds through public issue. So private companies are prohibited from making public offers, yes or no? Only public companies can raise funds through public issue, but promoters don't want to dilute their equities. The company explored the other options, other avenue of raising funds by issue of right shares to the existing members. However, only 100 lakhs could be generated. The banks and financial institutions are also reluctant to increase their exposure in the company. Now, referring to the provisions of Companies Act 2013, advise the company whether company can raise funds through private placement issue. Yes. If so, are there any limit for fresh offer? and time limit of allotment of securities. So two questions were asked. One is limit for fresh offer. Second one is time limit of allotment of securities. Time limit of allotment of securities, you all know, 60 days from the date of receipt of application money. Within 60 days from the date of receipt of application money, company has to make allotment of securities. Next one, limit for fresh offer. Under private placement offer come application letter, under private placement option, company can offer its securities to the persons not exceeding 200. So this is a simple question. This question was asked on private placement, and this question was asked for 5 marks. Next one, Dolls Toys Limited is having a net worth of rupees 310 crores. Paid up share capital 200 crores, free reserves and securities premium 110 crores. Okay, so net worth 310 crores. Out of 310 crores, 200 crores is the paid up share capital, 110 crores is the free reserves and securities premium, and the turnover of rupees 300 crores. Dolls Toys Limited wants to accept deposits from public other than its members. Referring to the provisions of Companies Act 2013, state whether Dolls Toys Limited is permitted to accept the deposits from public other than its members. Come on, tell me, who can accept deposits from non-members, or who can accept deposits from public other than its members? Only an eligible public company. Only an eligible company. To call a company as eligible company, it should satisfy two conditions. One is it must be a public company, and the second condition is either its net worth should be 100 crores or more, or turnover should be 500 crores or more. If you look at the name of company, yes, it is a public limited company. Dolls Toys Limited, public limited company, and its net worth is 310 crores. Yes, net worth condition satisfied. So in this case, company can accept deposits from public, that is other than its members. Okay, yes, possible. It is further mentioned that Dolls Toys Limited is in urgent need of funds as one of its contract is on the verge of completion, and it is promising to repay the deposits within a period of how many months? 4 months. Is Dolls Toys Limited permitted to accept deposits with repayment period of 4 months? General rule for acceptance of deposits with respect to tenure, tenure of deposits. Company can accept deposits for a tenure minimum 6 months, maximum 36 months. But to this rule, we had one exception. What is that exception? For meeting short-term requirements, company may accept deposits for a tenure minimum 3 months. What is the tenure? Minimum 3 months. But there is a limit on quantum of deposits. The limit is 10% of paid up share capital plus free reserves plus securities premium. In the question, it is very clear. 10% of paid up share capital, that is 200 crores. Free reserves and securities 110 crores. So total 310 crores. On the 10% means 31 crores. Yes, company is permitted to accept 31 crores rupees deposits with a repayment period of 4 months. You see, this is the maximum limit, This is the maximum limit. Company may accept deposits up to 10% of paid up share capital plus free reserves plus securities premium for a tenure not less than 3 months. Next one. Referring to the provisions of General Clauses Act 1897, answer the following questions. Whether a new law is enacted by Government of India, what shall be its date of coming into force? So commencement date, they are asking commencement date. The answer is, just two options. One is the date is specified in the notification. From that specified date, the new law comes into force. If nothing is specified in the notification, then the date, when it received approval of the President of India, assent of the President of India, from that date onwards, the new law comes into the force. So simple 2 marks question, See, this is for 2 marks and this is for 2 marks. Now entire question is asked for 4 marks. Whenever a new law is enacted to replace the existing law, it repeals the old enactment. Describe the points which shall not have effect of repeal of the old enactment. So this is also simple question. They are asking you to write the effect of repeal, section 6. Simple question only. Next one. The paid up share capital of Star Furnishing Limited is 1 crore divided into 10 lakhs equity shares of rupees 10 each as at 31st March 2024. Out of this, Home Decor Limited is holding 6 lakh equity shares. So Home Decor Limited is holding 6 lakh equity shares in the 10 lakh equity shares of Star Furnishing Limited. That means Home Decor is holding 60% of capital of Star Furnishing Limited, which is more than half of the paid up share capital or more than half of the total voting power of the company. That means Home Decor Limited is a holding company. Star Furnishing Limited is a subsidiary company. So Star Furnishing is subsidiary. Home Decor is a holding company. And the remaining equity shares of 4 lakhs held by others. Simultaneously, Star Furnishing Limited is holding 7% equity shares of Home Decor Limited, out of which 2% equity shares are held as a legal representative of a deceased member of Home Decor Limited. So Star Furnishing Limited is also holding 7% of paid up share capital of Home Decor Limited. Out of this 7%, 2% is belonging to the deceased member. It is holding 2% of paid up share capital of Home Decor Limited as a legal representative of deceased member. On the basis of given information, examine and answer the following queries with reference to the provisions of Companies Act 2013. Can Star Furnishing Limited make further investment in equity shares of Home Decor Limited during 24-25? The answer is no. Subsidiary company is not allowed to hold shares in holding company. But to this rule, we had 3 exceptions. One is, as a legal representative, it can hold shares of holding company. As a trustee, it can hold shares of a holding company. And if it is already holding shares of holding company, before becoming subsidiary, it already acquired some stake in the holding company, then it can continue to hold such stake. There is no restriction on such holdings. But the point is, in these 3 situations, as a trustee, as a legal representative, it is entitled to voting rights in the general meetings of holding company. Understood? Everyone, only in 2 cases voting rights are allowed. In the last case, that means it is holding shares, the beneficial ownership is also lying with itself only. In case of legal representative, in case of trustee, it is just a registered member. Beneficial interest lies with some other persons. In the last situation, it is holding shares and the beneficial interest is also lying with subsidiary company. So in the last case, subsidiary company is not entitled to vote in the holding company general meetings. Understood? So can Star Furnishing Limited exercise voting rights at the annual general meeting of Home Decor Limited? As I just told you, it can exercise voting rights on the shares which it is holding as a legal representative or as a trustee. So in the question, it is very clear. It is holding 2% of equity shares as a legal representative of deceased member. So it can exercise voting rights on 2% of equity stake. Balance 5% equity stake, it is not entitled to exercise voting rights. And this question was asked for 5 marks. This is also a simple question. Naveen Tools Limited mortgaged its factory, land and building by equitable mortgage on 1st March 2023 to Goodwill Bank and availed a credit limit of 2 crores. Although the credit limit was sanctioned by the bank, but the company actually availed such credit facility only in the month of August 2023. Sanction happened in the year 2023, 1st March. Whereas credit facility was availed in the month of August 23. When it is issued a check in favor of a creditor towards the payment of raw material purchased from it. During the course of statutory audit, the auditor pointed out before the management of company about non-compliance of registration of charge with registrar within the stipulated time. The company officials informed that although mortgage-backed credit limit was sanctioned in March 23, but the company had not availed the facility till the month of August 23. Nonsense. So, the liability of registration of charge arises from the date of availment only, when the company issued a check from the mortgage-backed credit limit account and not when the loan was sanctioned and credit limit was assigned. Further, the company management pleaded that it is the responsibility of financer, oh my god, to get the charges registered with the registrar, since registration of charge is to be effected in favor of bank and for bank's own benefit. So the company is nowhere responsible for getting registration or for delayed registration. Oh my god. In the light of above facts, referring to the provisions of Companies Act, discuss when triggering point for registration of charge shall arise. Option A, at the time of credit limit sanctioned by the bank, or at the time of availing of credit limit when check was issued by the company. Forget about the question. Come on, tell me, what is the, when company has to register charge? Whenever company creates a charge, in favor of charge holder, it is the responsibility of company to register the charge with registrar of companies. It is immaterial when they borrowed funds from the bank, when they got funds from the banks. Understood? It is immaterial when they availed credit limit, when they got funds from the banks. The only triggering point is creation of charge. When they created charge, it is the duty of company to register charge with registrar of companies. So charge was created in the month of March 2023. Charge includes mortgage, yes or no? Charge was created on 1st March 2023. So the triggering point is 1st March 2023. So accordingly, option A is the correct answer at the time of credit limit sanctioned by the bank. Understood? What are the consequences for non-registration of charge on Naveen Tools Limited? The charge becomes void. Debt is valid. Charge becomes void and the debt is payable immediately. Charge holder will not get any rights similar to the rights of secured creditor. Suppose if a company went into liquidation and the charge was not registered, now he can't claim the status of secured creditor. He will be settled along with unsecured creditors. Next one, explain the rule which suggests that plain word requires no explanation and technical words would be understood in technical sense only. See, this is the rule of literal construction. A simple direct question from interpretation of statutes, and this question was asked for 4 marks. Next one, XYZ Limited is a company having a paid up share capital of rupees 75 crores. Though it was performing well in the recent years, it suffered losses in the first and second quarter of financial year 23-24. In order to sustain its image, the board of directors declared an interim dividend at the rate of 30% on the paid up equity share capital on 4th October 2023. The following are the additional information extracted from the books of accounts for the past 5 financial years. Financial year ending 31st March and rate of dividend declared. So 5 years data was given. Examining the provisions of Companies Act 2013, decide the validity of board's declaration of 30% interim dividend. See, if company wants to declare a dividend, if board of directors wants to declare a dividend, and in that quarter or in that period, suppose company is in losses, now they can't declare dividend at the rate exceeding last 3 years average rate of dividend. In case of inadequate profits or in case of no profits, company can declare dividends out of accumulated reserves. Out of previous years accumulated profits, they can declare and they can pay dividend, but the rate of dividend shall not exceed last 3 years average rate of dividend. So here last 3 years means you have to consider 21, 22, 23. To confuse you, they gave 5 years data. Understood? So you have to consider last 3 years data. So just average it 15 plus 30 divided by 3. So 60 by 3, that is 20%. Now act of board of directors declaring 30% interim dividend is invalid. They can declare dividend up to 20%. So 30% interim dividend is against to the Companies Act 2013. Next one. Okay, this question was asked for 5 marks. Simple question. Next one. Strong Steels Limited LLP was incorporated on 1st April 2010 with 10 partners. The LLP had very good business and made considerable profits during the past years. Recently, due to obsolete practices, outdated practices, Strong Steels Limited LLP started making loss. Also, Strong Steels Limited LLP did not file its annual returns from 2020-21. 3 partners decided that LLP be wound up by the tribunal. The remaining partners objected to it. Referring to the section 64 of LLP Act 2008, can tribunal pass an order to wound up Strong Steels Limited LLP? Yes, tribunal is having power to pass an order regarding winding up of LLP. So just you need to write the provisions of section 64 of LLP Act 2008. And this is also a direct question. Next one, also state the provisions and penalty for not filing annual return with the registrar. The annual return should be filed within 60 days of closure of financial year, or else there is a penalty 100 per day. Maximum 1 lakh rupees for LLP, 50,000 rupees to the designated partner. Clear everyone? Next question, what is the purpose of inclusion of definitions of certain words and expressions in the body of any statute? So they're asking you purpose of definitions. to avoid frequent repetitions in the entire law, to shorten the length of the, to shorten the language of the law. And next one, to bring uniformity of the words used in the statute. So this is the answer for inclusion of definitions of certain words and expressions in the body of any statute. Next one, the definition sometimes includes the words mean, include, means and include, and to apply to and include. What is the meaning of such words? So simple question. This is also a simple question, ma. So they're asking you about mean, include, means and includes. So means, it is an exhaustive definition. Includes, it is an inclusive definition. So in case of definition having word mean, so the definition will exactly define the word. In case of definition having the word includes, here the definition is not defining the word. In fact, it is giving a complete list of items covered by the word. Next one, means and includes. So simple question, and this question was asked for 4 marks. Expected questions only, these are expected questions only. Next one, Sanjana joined a company named as Designers Clothes Limited as an independent director. In order to know more about the company, she wanted to inspect books of accounts and minutes book of board meetings held during the previous 3 years. The company is keeping the books of accounts and other records at its registered office, which is at Mumbai, whereas Sanjana resides in Kolkata. Therefore, through power of attorney, Sanjana authorized her friend Avantika, who is a chartered accountant and does practice in Mumbai, to make an inspection of books of accounts and minutes books of the meetings of the board. Giving the relevant provisions of Companies Act 2013 and its rules, examine whether Avantika can make inspection on behalf of Sanjana. The answer is no. The answer is no. Only board of directors, independent director or executive director can inspect books of accounts of the company. In case a director want to inspect subsidiary company books of accounts, then the director should be authorized by the board of holding company. Understood? So this right can't be delegated. So director cannot inspect books of accounts through his attorney. And this question was asked for 5 marks. Next one, A, B, C, D are the partners of Alpha LLP and have equal share in the profits and losses of LLP. A has made an agreement to transfer 70% of his share in the profits of Alpha LLP to his daughter X. So this is simply assignment of interest in the LLP is possible. My assignment of interest in LLP is possible. X wanted to access information about the trading transactions of Alpha LLP, claiming that she is entitled to the information as she receives a percentage of profits from the LLP. But the point is, the assignee had no right to participate in the affairs of LLP, had no right to inspect the books of accounts of LLP. So the partner refused to grant her access. Correct. Does X have any remedy against the denial according to the provisions of LLP Act 2008? Are the partners correct in denying the access to the X? The answer is absolutely yes. And this question was asked for 5 marks. Next one. In a contract of sale, Mr. A fraudulently sold certain unmarketable goods to Mr. B. Now, Mr. A is liable for the fraudulent activity under both the Indian Contract Act 1872 and the Sale of Goods Act 1930. State the provision as per the General Clauses Act 1897 as to whether his offence is punishable under both the acts. So this is a question from General Clauses Act 1897. Any person, if he commits an offence and punishment with respect to that offence was given in 2 or more enactments, then the question is, will he get punishment? Will he be punished under 2 or more enactments? The answer is no. He will get punishment only under 1 act, provided that offence is same offence. Understood? Suppose he committed 2 offenses. 2 offenses are dealt by 2 enactments separately. In that case, he will get punishment under both enactments. But the point here is, he committed only 1 offense, and that offense is a same offense which was prescribed in Indian Contract Act as well as Sale of Goods Act. Now he will be punished only under 1 act, not both the acts. And this question was asked for 4 marks. Mr. P bought a car from Mr. G, who was his friend. Mr. P did not check the car or test drive it. Whether the purchase made could be said to be made in good faith? Explain with reference to the provisions of General Clauses Act 1897. Okay, sorry, these 2 questions were asked for 4 marks. That means, this is for 2 marks and this is for 2 marks. Okay, so here the answer is, if you refer to the provisions of General Clauses Act 1897, here good faith means honest, activity done with honest. It is immaterial whether he is a negligent or careless. But referring to the provisions of Indian Contract Act, good faith means he should be honest and he should not be negligent. So referring to the provisions of Indian Contract Act, this is not a valid purchase. He will not get any remedy. But if you refer to the provisions of General Clauses Act 1897, this is a valid purchase. He can claim remedies. So write both the answers. Just give reference of General Clauses Act as well as reference to the Indian Contract Act. So as per General Clauses Act, yes, this purchase is said to be made in good faith, because in General Clauses Act, good faith means an act done with honest. It is immaterial whether he was negligent or careless. Understood? Coming to the Indian Contract Act, he should be honest and he should act not in a negligent manner. Next one, sixth question, last question. Silk Textile Limited is a company which is incorporated in India. It holds two subsidiaries, Print Limited, in which it holds 80% of the shares, and Stitch Limited, a wholly owned subsidiary. Both the subsidiaries are incorporated outside India. The board of directors of Silk Textile Limited intends to call an EGM of Silk Textile Limited. During the same time, board of Print Limited also wanted to hold an EGM on urgent basis at Dubai. The chairman, with the consent of his board, wanted to hold the EGM of Silk Textile Limited yet to Dubai. See, Silk Textile Limited is a company which is incorporated in India, ma. So company, if it is incorporated in India and if it wants to conduct extraordinary general meeting, it can conduct EGM at any place in India. It can't conduct EGM at a place outside India. Understood? But the company secretary advised the chairman that he cannot hold EGM outside India. Referring to the provisions of Companies Act 2013, advised the board of directors on the following. Whether board of Silk Textile Limited can hold its EGM at Dubai? No. Whether EGM of Print Limited can be held at Dubai? Yes, because this is a company incorporated outside India. Print Limited is a company incorporated outside India. Just look at the question. Both the subsidiaries are incorporated outside India. So Print Limited can hold EGM at Dubai, but Silk Textiles Limited, it cannot hold EGM outside India. And this question was asked for 5 marks. Next one, there is a choice to this question. Creative Textiles Limited is an unlisted public company. The company's paid up share capital is rupees 50 lakhs, consisting of 5 lakh shares having face value of rupees 10 each. Raman is having 50,000 shares in the company. He is not happy with Somnath, who is a director in the company. He believed that Somnath is acting against the interests of the company. Raman wanted to remove Somnath from directorship. Removal of a person from directorship requires the approval of shareholders, correct, in the general meeting. AGM of company has recently been concluded and the next AGM will be held in the next year. Considering the case and referring to the provisions of Companies Act 2013, advice, can Raman as an individual shareholder make a requisition to the company for calling of AGM for putting such resolution? See, this is a company with share capital. First of all, this is a company with share capital. In case of company with share capital, members holding not less than 1/10 of the paid up share capital can give requisition to the company, can demand company to call for an EGM. So here, Mr. Raman is holding 50,000 shares out of 5 lakh shares of the company. That means which is 1/10 of the share capital of the company. Understood? So this requisition, requisition by Raman is valid. It is meeting the provisions of Companies Act. If company does not call the EGM on the requisition of Raman, whether Raman can himself call the EGM? Yes. So both the questions, the answer is yes. And this question is for 5 marks. So these two questions were tested on extraordinary general meetings only. One is on place of EGM and the other one is on eligibility for filing requisition with company. Next one, Beauty Cosmetics, a company incorporated in Korea, has established its branch office in Chennai for conducting its business in India. The structure of paid up share capital of Beauty Cosmetics as at 31st March 2024 is as below. The company does not have any preference share capital. Okay. Equity share capital held by Mr. L, an Indian citizen, 10%. Mr. R, an Indian citizen, 20%. Equity share capital held by Fairness Cosmetics Limited, an Indian company, 20%. So if a company which is incorporated outside India, and in that company, individual Indian citizens or any body corporates which were incorporated in India, if they hold, jointly or, combined, so total, combined holding of these people in that company, if it is not less than 50%, not less than 50%, then that company which is incorporated outside India is deemed to be an Indian company with respect to the business operations that they are carrying in India. So this is with respect to limit on deemed Indian companies, and the limit is not less than 50%. That means at least 50%. So if you observe carefully, 10 plus 20 plus 20, so total it is 50%. In fact, if you read that provision, in that provision it is very clear. Not only equity share capital, it also considers preference share capital too. You being a chartered accountant are asked to explain with reference to the provisions of Companies Act 2013 whether beauty cosmetics shall be deemed to be a foreign company or an Indian company for the business carried on by it in India. For the business operations carried on by it in India, it is deemed to be an Indian company. For the business carried on by it in India, will it be required to comply with the relevant provisions of Companies Act 2013 as if it is an Indian company law? As if it is an Indian company? The answer is yes. All the provisions of Companies Act 2013 are applicable to this company, Beauty Cosmetics Limited. Are you getting my point, students? So this question was asked for 5 marks. So you can answer this question only if you remember the limits of deemed Indian company. So what are the conditions, ma? First of all, it is a company incorporated outside India, carrying business operations in India, and in that company, India, one or more Indian citizens, one or more body corporates incorporated in India, all put together, if they hold not less than 50% of capital of that company, then with respect to business operations carried in India, it is deemed to be an Indian company. Accordingly, it is required to comply with all provisions of Companies Act 2013. Last question. Mithali Diamonds Limited is a company engaged in business of cutting, polishing and trading of diamonds in and outside India. The company exports the diamonds to USA. For the last 5 financial years, the foreign exchange earned by the company in exporting the diamond are as under 23, 24, 22, 23, 21, 22, 20, 21. Yes, they have given foreign exchange earnings. The company wants to give donation of USD 10,000 to an institution situated in USA which provides technical support and training in the field of cutting and polishing of raw diamonds. This will help the company in guiding its own employees posted in USA to get the requisite training. Referring to the provisions of FEMA, state whether company can give donation to such institution in USA. Yes, but there is a limit on the donation. The limit is 1% of last 3 years foreign exchange earnings, or 50 lakh dollars, whichever is less. You need to write this provision and you need to write the conclusion. Are you all getting my point, students? Everyone. So without RBI approval, they can make donations up to 1% of last 3 years foreign exchange earnings, or 50 lakh dollars, whichever is less. If they want to donate more amount, more than that limit, definitely RBI approval is required. So with this, question paper analysis is completed. Now I made one more brief analysis about the question paper, ma. So question numbers, topics, marks, material reference, marathon reference. See, from our institute we provided a free resources, ma. You can see here, Shrestha for CA and CMA. So here just click on free resources. You can find corporate and other laws. In this corporate and other laws, yes, you can find study materials. So paper 2A, corporate law, module 1, module 2 and other laws. Along with that, we also shared 2 more resources. One is with respect to statutory limits and the other one is with respect to punishments and penalties. See why I'm showing these 2 documents. The reason is, if you go through this question paper, almost 27 marks was tested on time limits as well as monetary limits. Suppose if you see voluntary revision of financial statements, so here you need to remember preceding 3 financial years. Next one with respect to private placement, allotment of securities time limit. Next, eligible company, with respect to deposits, eligible company limits. Next one, tenure for deposits. For deposits, deposits for a tenure, minimum 3 months. There is a limit on quantum of deposits. Next one, And next one, it is declaration of dividends in case of inadequacy of profits. Last 3 years average rate of dividend. This is one more limit. Next one, penalty for non-filing of annual returns. And next one, 6A, EGM on requisition. Here also there is a limit, who can file requisition. And deemed Indian company, we are having one more limit here. Next, FEMA donations. Yes, here also there is a limit. Now, considering all the exceptional circumstances, if you observe this question paper, 27 marks were tested on time limits as well as monetary limits. And 2.5 marks were tested on penalties. In case of LLP, non-filing of annual return, what is the penalty? They asked you. So, entire question paper is for 89 marks. Out of 89 marks, you can answer these 27 marks only when you are thorough with time limits as well as monetary limits. And you can attempt these 2.5 marks only when you are thorough with penalties. All these points were given in our material, so you can find our material references here also. First question, in which page the content is there, in which module, in which page, and all these points I already covered in marathons also. So nothing came out of my marathon ma. And you can also find that marathon lectures ma. You can find it in CA Ramharsha YouTube channel. So here you can see there are 3 videos. One is Company Law Marathon Part 1. Next one, Company Law Marathon Part 2. And next one, Other Laws Marathon. So from these 3 video lectures, yes, all the questions came. I'm not exaggerating myself, but I'm telling you, considering all exceptional circumstances, we designed our materials and we designed our marathon lectures. And after looking this paper, I'm very much sure, a student with at least moderate conceptual clarity can answer this type of questions. Yes. So to answer the questions of this paper, conceptual clarity is must and should. So I'm uploading these 2 documents also. So you can find our materials, material resources. Yes, I have given the links. Marathons also I have given all the links. Each and every point is very important, and all the points I covered in my marathon, you can check it once. Okay. So with this, I conclude my video.